Happy Friday. Let's get this going here. Okay, I think we are live now. Hello, happy Friday. I am Kanisha Coleman, the Beauty CPA, and I own Coleman Tax, a boutique tax firm that exclusively serves beauty entrepreneurs. Our main mission and goal is to put you in a position where you are saving lots on taxes. You're paying the least amount of taxes legally possible, and we do that through tax planning and CFO services. That's just a fancy word for bookkeeping, but I do provide an elevated client experience in that area. So let's get to what we're talking about today. Today we are talking about 7 steps to slay your taxes. Step number 3, which is maximizing your tax deductions. Before we get into that though, I do have a couple of updates. I do have a couple of tax news updates. Now let's first address the elephant in the room. I am dressed like this because I am planning to go work out after this live. I'm going to go work out after this live. That's like one of my biggest things this year is to do better in self-care, health area of my life. So I'm dressed for it. It's like if you got the clothes on, you got shoes on, you might as well go do it, right? And so that's why the first thing I did when I got up this morning is I put on some workout clothes and I made me a smoothie and I pulled up, the exercise routine I'm gonna do today, this morning. And it's like after this live is over, that's my next thing to do today. So forgive the dress downness of all of this, okay? To the updates. I have just a couple. I know all of you probably have heard this by now, right? But this is just breaking news. Just happened maybe a couple of days ago. They've extended the tax deadline. Now I remember having a live in January, the January tax town hall. And just to remind y'all, if y'all missed any of these tax town halls, I have them once a month. Towards the beginning of the month, the first Tuesday of every month, usually, I try to have them. And you can go see all the January, the February, and the March one. You can see those. And if you're on Instagram, they're my IGTV. And then if you're on Facebook, you can see them in the video section. But I try to do the tax town halls once a month. Couple reasons. 1, to give you tax updates, things that have happened over the past month. 2, so that I can address all of the questions that I get. I get a lot of questions in a given month. And I think because they come to me privately, it would be great if I just told you all what they were, because you probably have the same questions, okay? And then 3, it gives you the opportunity to ask me questions and I answer them to you live, okay? So that's why I have the tax town halls. If you missed any of them, just go to my IGTV or Instagram or Facebook. Just go to the video section. But I remember during the January when I was like, I got the question, do you think it's going to be pushed back like it was last year? Remember last year they rescheduled it from April to June or July. They rescheduled it for July, right? But when this year started, we heard nothing. The IRS wasn't budging. They were like, the tax deadlines are what they are. And that was it. Well, a couple days ago, they did extend it from April to May. So instead of your tax returns being due April 15th, individuals and C Corps, they are now due May 17th. Because I think the 15th falls on probably a weekend or something. So it's May 17th this year. Now remember, if you're in Texas because of the storms that happened there, that kind of devastated some parts of Texas, you guys have an extension until June 15th. Okay, until June 15th. Now always remember, you can file an extension, automatic 6-month extension for all of this, okay? So if you file an extension and you live anywhere but Texas, you can get extended into October. And I think it's still October for Texas. So forget that last comment. I think it's for everybody. If you file an extension, you can still get it extended until October the 15th. So keep that in mind. Y'all got some extra time. That could be a good or a bad thing. You know, it's kind of like Parkinson's law. You will take, you know what I'm saying? A task will be as long as you allow it to be, right? So yes, you do have extension, but by no means wait until that long to file your tax return, because that time will fly by before you know it, it's May. So yes, that's the extension. Another update, and this is just gossip right now, right? This is just grapevine gossip right now. It hasn't been signed into law or anything yet, but word on the tax street, right? Roll on the SBA PPP loan street is that they are lobbying to extend that deadline by 2 months. Now remember, they opened up PPP for another. This would have been the third round, right? There were 2 last year in 2020, and then the third round is open now. First one for 2021, but the third one overall. That time frame to apply to the PPP program was going to end March 31st, and 12 days. So a little under a couple weeks is going to be done over PPP. Well, they're lobbying to extend that time for you to apply by 2 months until end of May. Keep in mind, for my Schedule C and my partnerships, my Schedule C filers, so sole proprietors or single member LLCs, or my partnerships, keep in mind that now you can apply using your gross income instead of your net. I got that question a lot. Remember before, if you ran a loss, you couldn't get no money because it was based off net profit. And if you ran a loss, you have no net profit. Well, now you can do it based on gross income. So keep that in mind. If you need PPP funds, you can apply, potentially get a bigger loan. Remember, this loan is forgivable, so it's like free money here. So that's why it's kind of important for them to, be open to extending this deadline. But until it's a law, until it is announced by the SBA, it's just tax gossip at this point. But keep soon as I know something, y'all will know something. So keep an eye out for my Instagram or my Facebook. Keep an eye out for that. If you're on my email list, you'll get it via email, text list, all that. And that's kind of why it pays to kind of be in the community. It's great to be on Instagram. It's great to be on Facebook. But when you're on my email list or my text message club, you'll get that stuff for certain. You'll get it right away. So keep that in mind as well. So let's get into maximizing deductions. Maximizing deductions here. This is like gotta be one of my top 3 questions. Top 3 question is, what can I deduct in my business? There's a lot of misconception around deductions. And honestly, y'all, it's really not that complex at all. It's pretty straightforward what you conduct in your beauty business, okay? This step is a part of a series, right? I have a series, 7 steps to slay your taxes. And this series, it is just not for content, for social media, right? It's not just about that. This system, this series is a workflow you can implement in your beauty business. A lot of people have a hard time keeping up with just taxes in their beauty business, which means to me, you just need an SOP or a standard operating procedure. So this 7 steps to slay your taxes is not just a cute title for me. It really is an SOP or a framework, a workflow that you can implement in your business to make sure that every year when taxes come up, you can follow this system and you can knock it out and be done. Okay? So keep up with these steps, and you can see all the videos are bundled in my various social media platforms so you can go to access. But seriously, take a look at steps, 1 through 7. Use it as an SOP. Implement the workflow in your business, And literally, you should never be confused about how to keep up with tax compliance every tax season. All right, so let's start. I will give you an overview of the 7 steps. Okay, step 1 is gathering your data and your documents. So when I say data, I mean your financial data. That's your bookkeeping. We talked about that a couple weeks ago. How to get your bookkeeping together. What happens if you did no bookkeeping all year and now it's time to file a tax return? How do you file the business taxes when you've done no bookkeeping? We talked about how to do that. We talked about the tax documents that you would have received if certain things happened to you throughout the tax year. Okay, that's all what step 1 was about. Step 2 is, now that you know what you're working with, now that you have your data, your documents, step 2 is deciding, are you going to hire somebody to do this for you, or are you doing it yourself? Really making that decision. How will you make that decision? Right? If it takes you, on average, it takes the average taxpayer about 20 to 24 hours to prepare their own tax return. Versus me, I can do a tax return in like 30 minutes and be correct. Even when you do it yourself, you're going to be like wondering, like, did I do this right? You know? So you got to weigh those options. And we talked about the criteria for you to keep in mind when you're making that decision. Now we're on step 3, and that's reporting all of your income and maximizing your deductions. Believe it or not, most small business owners, they overpay in taxes because they don't take all their deductions. They overpay. Can you imagine that? Overpaying your bill, paying too much taxes because you're really not maximizing how much you can really take. Okay. Step 4, after you're reporting on your income, maximizing your deductions, and you've gotten that return prepared. Now it's time to review that return. Y'all be surprised how many tax returns I get back in 5 minutes with a signature. You have not reviewed that return. That's why I offer all of my clients like a walkthrough, a brief walkthrough, making sure you understand how things are being reported. Because you're going to come in situations where you're using that tax return to apply to loans, apply to get capitals, apply for grants, apply for different type of stuff where they need to look at your tax return, and they'll ask you a question. They're going to expect you, the owner, to know the answer. They're not going to be like, wait 1 second while I call my CPA or my accountant. You know what I'm saying? So that's why it's important to review the return, and I'm going to give you a mini checklist on how to do just that. Okay. Step 5 is all about, okay, do you have a tax bill, so a tax due, or do you have a refund? If you have a tax bill, tax due, you can't pay it all at once, you got to do an installment agreement and do it right away. And we'll talk about how to do that. Believe it or not, your tax preparer knows how to do that for you while they're preparing your return. But a lot of professionals, for whatever reason, don't offer that, don't have that discussion with their clients. They just say, go online and do it that way. But they can do it for you through their professional tax software if that's what they're using to prepare your return. Okay? And then if you got a refund, I know we're in a different time right now and you may want to get that money back. But in a normal tax year, I kind of want to put this idea in your head. You can roll that over to the next year. So then it can cut down what you owe in a following year. It's like prepaying your taxes. Okay? So keep that in mind as an option. Okay? The step after that, step 6, is audit proofing your return. Audit proofing your return. What does that mean, to audit proof your return? That means that if you are audited, or you get a notice, or you get an audit notice from the IRS or whatever state you live in, right? Can you support the deductions that are on your tax return? And then what do you need in your business to retain to be able to support that position? So I don't know if most of you know this about me or remember this about me, but I spent the first 8 years of my career as a revenue agent for the IRS. Sorry, I drew a blank. I was a revenue agent for the IRS, so I did go and I did audits for small, mid-sized, and large businesses. And anytime I would go to a taxpayer and I would give them a list, here are the issues that I'm going to look at. Here are all the red flags on your return that I've identified. If they were able to quickly give something back to me saying, hey, here is the support or the proof for those deductions, we can wrap that audit up right away. We can wrap that up and be done. And so that's how they audit proofed their return. Okay, because they was ready. And then last step 7 is retaining your tax documents. IRS has 3 years from when you file your return to come audit you. So you got to keep those documents for at least 3 years. Upload them to the cloud or do whatever you have to do. I would definitely give you some options when we get to that step. But that's an overview of what the 7 steps to stay your taxes is. It's a workflow. Okay, it's not just what I can come on every week and talk to y'all about on IG or Facebook. It really is an SOP or workflow implemented in your business. You will not be confused as to how to tackle the task of taxes every year. Okay, so let's get into step 3, which is maximizing your deductions. This might be I have 2 favorite steps. Okay, and this might be the favorite. My second favorite is getting your books together, which is bookkeeping. But this is my favorite, right? Because it's all about how to lower that tax bill as much as possible. Like I said before, most small businesses in this country overpay in taxes. When you put all those overpaid taxes together, it amounts to billions of dollars of overpaid taxes because folks ain't taking all the deductions that they can take. And I think the reason why, 2 reasons. 1, they're confused about what they can take. And then 2, they're not doing any bookkeeping. Guys, you cannot deduct what you don't track. You're not going to remember everything, every penny you spend money on your business. Okay? So 2 reasons. If you want to combat this problem, 1, you have to do bookkeeping. You can't deduct what you don't track. You cannot manage what you don't track. You have to track all money in, all money out. And then 2, we're going to get clarity on what you can deduct. And that's what I'm going to talk to you about in the next, 10 minutes or so. I like to keep these short so I don't take up too much of your time. But so let me clarify what you can deduct. Okay. Now let's first define what a tax deduction is. I want you to think of a tax deduction as synonymous with the money that you spend on your business. If it's a business expense, right? You spent money on this. Think of that as a tax deduction. It's synonymous, okay? It is synonymous. So if you spent, $500 on equipment for your salon or spa, or on some supplies, or some items that you're going to resell as retail, and that's a business expense to you, it is likely a tax deduction, okay? It is likely a tax deduction. So if it's a business expense, it's a tax deduction. That's in general what I want you to keep up. You spend money on it for your beauty business, it's a tax deduction. You can write it off, all right? Now, how does this lower your tax bill? Because your tax bill is based on your net profit. It's based on your net profit. So if you have gross income, which is all the money you're making, right? But that revenue, that income, you're going to spend it on expenses. You're going to spend it on expenses. And then you're going to have a bottom line, which is your net profit. Okay? It's your net profit. That's what the tax bill is based on. So the lower you can get that number, the lower your tax bill will be. And that's how tax deductions lower your tax bill. Why is this important? Because we want to pay the lowest amount of taxes possible. And this is one of the easiest ways you can do that, because why? You're spending money on the taxes anyway. So let's think of, there are 4 tests that a business expense must pass to be tax deductible. I wish I could have thought of like a cute acronym, but I haven't yet. I'll figure out how. Others have. I didn't want to steal theirs. But I'm going to think of a cute acronym you can remember. But let's go over the 4, okay? They're not hard, I promise. Test number 1, super easy. It has to be business related. Has to be business related, of course. Because I just said, think of a tax deduction as synonymous with your business expenses, the money you're spending on running your business. Not even just running your business, but running your business, developing your business, scaling your business, growing your business. You can think of a ton of other adjectives and verbs, but if it's business related, you spend this money for the business, it's tax deductible. That's the number one test. Number two, it has to be necessary. Now, what does necessary mean? Necessary does not mean like the literal term necessity. You know how like we need water and we need food or we're done as a human, right? It's not like that. It's not like, the bare minimum you need to run your business. No, that's not what necessary means in the tax code. It means appropriate or helpful for developing, maintaining, growing, scaling your business. And this is all circumstantial, right? So for example, I know a lot of you may have like refreshments in your waiting area for clients when they come in a little early, you can go ahead and sit them in this chair with magazines that you subscribe to, and you probably offer them like, would you like water or some pop? I'm from Indiana, so I call it pop, not soda. So is that necessary? Is that a necessity to run your business? No, it's not a necessity. You'll have a business without magazine subscriptions and pop or water, but it is helpful, right? For you to be able to be accommodating and hospitable to clients that are waiting for you to be served. So think of it that way. Don't think of the test of necessary as a necessity, but is it helpful and appropriate for maintaining, developing, growing, aiding your business? Okay, step number 3. Is it ordinary? And I love this one. This one is very gray, right? Is it ordinary? Is it common and accepted for your business, right? And this is different across industries. By far, it will be different. For example, let's get into it. Okay. When you all are decorating your salon or your spa, because you got clients coming in, one thing that I notice about beauty entrepreneurs is environment is everything, right? So you may go all out with the furniture and the decor and just the little details and nuances because you really want to provide this super awesome environment and experience for when the client comes in. Your physical environment is very important. It's not like even related to what you're doing for the client, right? To their body. But you want them to feel a certain way when they walk in, So you may go all out. You may spend thousands and thousands of dollars on decor and furniture to make it all look nice. Versus me, I'm a tax CPA, okay? When y'all come into my office, y'all are not gonna see the glitz and the glamour, right? So when the IRS looks at me and see I'm spending all this money on decor and all this, it's kind of like, this is not ordinary for a tax CPA to have all this glitz and glamour everywhere and spending thousands of dollars on it, but it's totally common for a beauty entrepreneur by far, right? I'm gonna give you another example. I don't know if you guys own a home or have ever bought property, commercial or residential, but if you're working with a realtor, realtors are usually dressed very nice, and they typically drive very nice cars. They are likely writing all of that off. And it's okay because that is common for realtors. Me, Kanisha, cannot do that. I can't. There is no justification for me to have, a Lambo truck or a Porsche truck outside and me write it off for taxes. Because that is not common for CPAs to do that. Okay? I'll use an example for your industry. Just my third one, and I'll let this go. because I really want this to sink in. I get a lot of questions about this. If I sell lashes, for example, if you sell lashes and you want to wear them as you go out to certain events, and that is your way of advertising the lashes you sell, can the lashes you put on yourself be a write-off for the business, a tax deduction? Yes, that is advertising and marketing for your business, because that's what you do. That is the best form, actually, because when people post pictures of these lashes on like white backgrounds, it's really, really hard to like, how would that look on me, or how does that look on a person? But when you see it on an actual person, it's like, oh yeah, I like those. I will want those for myself. And the best way to do is for you as the owner is to wear them when you're out. That way you get asked about them, or you talk to people about them, you can slap them that card or give them your website, and there you go, right? That's not common for me though, right? I can't write off my lashes. I don't have them right now, but when I do have them, I can't write them off as a business expense, because that is not common for CPAs to have lashes on. You get what I'm saying? I hope I gave you 3 examples. I hope those were good examples to really, really drilling in that ordinary part of the 4 tests is very circumstantial. And if it's common and accepted in your industry, you can write it off. Now, I will warn you, if you're ever audited and if things like this are ever challenged, you will have to build this case, because you'll likely get an agent that doesn't know your industry, right? You'll get an agent that does not know the beauty industry. So you will have to make the case. You will have to explain. But as long as you can do that, and I just gave you some ways to do that, you can write it off. The last test, guys, it cannot be lavish. It cannot be extravagant, okay? It cannot. For example, and mind you, this is also circumstantial, right? So if you are a multi-million-dollar salon or spa, can you spend higher amounts on things? Yes, because you make the money to support it. But if you are not at 6 figures, your deductions should be in line with the money that you're making. For example, if you're making $50K or $100K, I'll even say like $150, whatever. The fact that you will be spending 30% or more of your revenue on decor, you went and bought a Fabergé egg to put in your lobby, right? That's a little lavish. That's a little extravagant, okay? That's a little lavish and extravagant. I think that lavish and extravagant is self-explanatory, but again, it's all circumstantial. This is what I have for you guys, and I know this was short. I just did that in like less than 10 minutes. I do have a freebie that goes a lot deeper into this topic. If you go to the bio, the link in my bio on Instagram, it's like the second link. You can download my freebie, and then Facebook, I'll put it in the comments. I'll put in the comments the link to this freebie. It's called the Ultimate Tax Deductions Guide for Beautypreneurs. And it's like a 19-page guide. It will go into everything I talked about with greater detail, okay? At the end of this guide, it also gives you every single category of expenses a beautypreneur can take. It also gives you some advanced tax strategies or loopholes that you can use to take greater amounts of deductions on your tax return. Okay, so this is a very comprehensive all-in-one guide. I hope you guys take advantage of that. Once you get it, you keep it as a resource in your business. You'll never have to ask a question about what you conduct again, because that resource will give it all to you. I just put the link on Facebook. I think y'all just got the link. If you didn't, I'll put it in the description when this video is over. But yes, this guide is fantastic. It goes more into detail about the framework of how you're capturing all your deductions. It goes into what a deduction is, why it saves you money, why it is important so that you don't overpay in taxes, and it gives you all the tax deduction categories for beauty entrepreneurs, in advanced tax strategies. All right. So let's get into some questions. I do have a couple questions. Can you write off clothing? Depends on what the clothing is for. It depends on what it's for, right? It depends on what it's for. I can tell you this. If you purchase an outfit, right, and you can use this outfit outside of whatever business, event, or purpose, the IRS, they'll give you some of the deduction. They may not give you all of it because you can use it for personal reasons. You can use it for personal reasons. I'll give you an example of how you can write off something like clothing if you can make the case that it is 100% for business. You know how, like, let's say if you're like a dancer and you get outfits made for your performances. Yeah, you definitely can take 100% of that because you're likely only going to wear that outfit when you dancing. Likely. You can't wear that to like Kroger, right? But if it's an outfit that you as a beautypreneur purchase for a photo shoot, you probably can take, some of it as a deduction, but you can wear that outfit after the photo shoot. You can wear that outfit to Kroger. You can wear that outfit to, wherever else. If you come across a situation where you do buy an outfit, and you can only wear this outfit at a particular time and place. Let's say you're doing a hair show or beauty show, and so this outfit is in such a manner that that's the only place you would wear that. Then, yeah, you can deduct all of that. But if that's not the case, if you can use that outfit for some other personal, reason, you can't take all of it. You can take some of it, but not all of it. Okay. Okay. What's the next question? So would you recommend on set, would you recommend a uniform? I need clarity on that question. I'm not sure what you mean by on set. So I need clarity on that. What I will say is I think it's alluding to uniform as in a certain thing you only wear while you're working. And if that's the case, yes, you can take it all. Yes, you can take it all. But if it resembles something more than what can be worn in a particular work setting, that deduction will be limited. For example, if you're an esthetician and you're wearing scrubs, write those scrubs off. No one's going to wear scrubs. No one's going to willingly wear scrubs to the Kroger or to a club or to the library or to the mall or wherever else. So scrubs, yes, you can write off. But if it's just like some jeans and a cute top, you can say it's your uniform all day, but can you use it personally if you had to? Yes, you can. Okay. A stylist apron. Write the apron off. Yes. PPE consider supplies. Yes. Write it off. Yes, absolutely. Okay, I think that answers the question. Can I touch on payroll taxes? Oh yeah, I could do payroll taxes. I never would have thought you guys would have been. Well, I know the majority of beauty entrepreneurs don't have employees. The majority of beautypreneurs are solo practitioners. But for those of you who have employees, I can do payroll tax. If y'all interested in payroll tax, I can definitely do that. Business planning services on financial planning for that. Okay, so I do that within my CFO services package, right? So remember at the beginning I said I do CFO services. That's a fancy word for bookkeeping. My bookkeeping is a part of a CFO service experience, right? So when I provide CFO services to a client, it includes maintaining their QuickBooks Online file. So I maintain their monthly bookkeeping. And then we go a little beyond that, right? And we produce the financial statements. We put it into a dashboarding system where you can visually see how you perform month over month. We compile a budget so that you can see how you are performing and meeting your money goals and expense management throughout the year. And then we also do, you can pick your duration, right? It could be 6, 12, or 18 or 36 month forecasting out. A lot of my clients that do that, they're likely trying to raise capital, apply to grant programs, things of that nature. But if you just want to see how, how your sales could trend when you attribute certain growth rates or churn rates, we can definitely do that forecasting, and it's all a part of my CFO package. So yes, I do that. Beauty by K. Janae. I hope I said that right. Okay, guys, it has been 35 minutes. I am gonna let you go. I have used up too much of your time on this Friday morning. Remember, guys, we are still in tax season. If you have not filed your taxes, go ahead and hit that first link in my bio. Schedule your quick 15-minute call with me. We can talk, we can get on the phone, we can talk about tax prep for this tax season. You still have time, but just because you have the time, don't take all of that time, guys. So thank you for joining me today. I will be back on, what's the day? It's Thursday. We have the week. Later on, likely Saturday or Sunday. Likely Sunday. I do tax planning tips on Sunday. So you'll see me likely on Sunday. But I hope you have a great weekend. And bye for now.